Good afternoon. Welcome to the daily session here with Financial Source. Hope everyone's doing well. Happy Friday, everybody. Good morning, Osho. Good morning, TM. Mark, good to see you all. Lovely to be here, folks, and looking forward to getting us ready for the session. Let me just make sure my screen's being shared. That's correct. There we go. Lovely. Okay, folks, let's jump in and get on top of the narrative as quickly as possible as our usual dynamic. So a couple of things for us to note since the open. Okay, so first of all, we've got UK former Deputy PM Rayner noting that Gordon and Denton by-election results are a wake-up call and Labour has to be braver. Right, Sky News suggests these marks will be taken as a direct aim at UK PM Starmer and his leadership. There is pressure on the pound right now. This by-election result was a surprise win for the Green Party. Labour normally hold this by-election. If you extrapolated this forward into a general election, what political commentators are saying is that this means that Labour will lose the next general election. Because Labour are expected to lose the next general election, something needs to be done. The current Prime Minister, Keir Starmer, is seen as a liability by some rather than as an asset going into that next general election. So as a consequence, the pound is weak because investors are seeing yet more political instability for the pound. It's just constant instability for the pound, has been through a series of prime ministers across the Conservative and Labour Party, and now the Labour Party are being hit with the same negative sentiment. So the pound, you can see at time it was the weakest currency at 7 a.m. as those by-election results came in. So that does help the euro pound buy bias, and I wanted to point a couple of things out technically for you. So first of all, notice the yield spread, right, is pointing firmly higher again. The technical areas that we're expecting to hold have held that long trend line, that breakout from that channel. So we had a little bit of indecision. We were expecting buyers down at that 8,700. Didn't quite get down there, but I've maintained my longs. I've added to longs as I've gone above these highs. This is an attempt at a breakout of this level. Now, if you look at this on the monthly chart, what this is saying, and you can see this is very clearly, this is a bullish engulfing bar. So what that means is sellers thought, okay, hooray, we're taking it down to this level, close above, and it's a bullish engulfing bar above this potential trend line here. Okay? That shows a rejection of that level. We looked at that on the daily. Price looks like it wants to move back up to the test those highs, and I'm looking for a target around that 8,830. So I've just extended my target because that's, looking pretty strong. And if you look at the last few bullish engulfing bars we've had on the euro pound, you'll see that they've been pretty reliable on the monthly chart. Bullish engulfing bar up to near-term resistance. Bullish engulfing bar up to near-term resistance. Bullish engulfing bar, right? Maybe up to maybe the 900 even, right? I definitely think the 8,830 is reasonable in the short term. So that euro pound buy bias remains. I know, Osho, you're in that euro pound trade. And political instability is just underpinning this pound weakness. And that's, it's about, I think it's 60% chance that Keir Starmer is going to be gone by the summer. Yeah, it's this by-election result has just really freaked markets, and investors just seeing, okay, there isn't that much clarity out there for the pound. So I've added to the longs taking above those highs. So remains to be seen, but as it stands, the yield spread still supporting euro pound to the upside. And if you remember the broad outlook, it's the interest rate differentials that were underpinning this move. The ECB expected to be flat, hardly any interest rate moves this year. If anything, they're expected to stay on hold, whereas the Bank of England are expected to cut interest rates this year. So that, now we looked at yesterday some of the Bank of England situation. It's a bit more nuanced for the Bank of England than it perhaps was. The latest inflation data was still in line with what markets were what the banking were roughly expecting, but not quite as good. So the interest rate markets did not change very much. And now you can see a slight drop just on those expectations of weaker leadership for the United Kingdom. So that's the euro pound outlook, and that's just come in, right? Been breaking since the news. We've got this PMI, CPI data out of Europe. It's not likely to move markets much because it's just not in focus right now. But you got a series of European CPI data points. Now let's go to the daily European open news. Asia Pacific stocks ultimately higher heading into month end. Remember this dynamic. You tend to see stocks tend to benefit around the turn of the month. So if you look at intra-month, here we go. Let's look at turn of the month here. Turn of the month. Turn of the month. If we look at first day of March, right? Generally, you tend to see an uptick around the turn of the month from the first sort of around this window. You tend to see gains, but interestingly, the S&P 500 is quite negative for the first day of March. There is positioning going on, so that'd be interesting to see that dynamic. Now, I'm a bit surprised to see that because normally, if you just look at the first day of the month, do you see it's normally a bias to the upside generally, but the first day of March, so just be careful. Seasonality is pointing towards a weaker period. If you look at just around the turn of the month, the day before and the day after, yeah, okay, still a little bit higher. Hey, Stephen, good to see you. Yeah, thank you. That's a fun little lizard. I don't know why that makes me laugh so much, but it does. Yeah, yeah. Yeah, happy Friday, Stephen. It's that time, right? Yeah, thank you for lightening the mood. Just be aware of that dynamic going on. Yeah, Iran negotiations are going on. There's a slight kind of mood that's rippling through markets that there's going to be some kind of deal done. But if this US-Iran negotiation breaks down, like we saw yesterday, we saw sudden dollar strength coming in. We saw sudden gold strength. It took a while for it to get there, but it came in. We saw oil spike higher and a little bit of yen strength. So that's what you'd expect. So watch out for that. US-Iran talks breakdown. Expect gold upside, dollar upside, oil upside. They're only pricing in about, it's about 50-50 chance whether the US strikes Iran or not. So that's where we're at. So it's not all priced in. So there's opportunities there if you have a surprise move. Now there's not much. There's PPI data coming out from the Fed, but it's not massively market moving. I'm just seeing yen firmer after Tokyo CPI data. That has faded since. Euro dollar just benefiting a little bit from the stronger inflation data out of France. Yeah, so today, really what is out there? Let's just go through yesterday's tradable opportunity. So first of all, that dollar yen with a nice dip down to that option expiry level. Just overnight, triggered in. So for there, I would definitely take 50% off and then just leave the rest at break even. If we saw US Iran strikes, here or over the weekend, yeah. Oh, nice, T. I'm just reading your message. Yeah, you're right. It was that strong risk off sentiment that came into the market. And when we saw equities selling off quite heavily, and that mood built, didn't it? And then the US Iran headlines made it worse. It was. We were trading the ES futures, and there was a cup. We got a one short, one long, and then one short later in line with that move. Yeah, yeah. The reason the dollar yen was quite flat because the dollar and the yen both benefit from the risk off trading. So you had dollar strength and yen strength, and they kind of just evened each other out. For me, I was just happy with that tiny stop. So if the yen strength dominates, you just go straight through it, fine. But otherwise, just a little tiny stop, and you can potentially get in on it. The euro dollar trade, the way to have handled that is the sell would have come in intraday. I still think this area is still valid, right? But we had the move down, and you take 50% off down there, right? Break even. But if you're still in that trade, that's absolutely fine. That's still the valid area. You see, this is the turning point. You see, you're getting priced false breaks, false breaks, false breaks, false breaks. So that should have been something for you yesterday on the euro dollar. Like I know you got it, TM, but for anyone else, it's just that's the move. That's the very small stop you want. Apart from that, the only thing to be looking out for that I can see today is the PPI print. And if this comes in super hot, then that should give some dollar strength. Yeah, yeah, makes sense, TM. Yeah, let's have a quick look at the Aussie US dollar. Where is it? Yeah, just getting that kind of breakdown there. Yeah, yeah, it made sense. Aussie long's very stretched. So again, if you get US Iran strikes, then the Aussie US dollar should play down as well. But just notice that commodities are doing quite well today, and that's supporting the Aussie dollar. So iron ore finding some dips, commodities up, copper up. All of that is supportive of the Aussie dollar. So today, like the I can just see like pound weakness. So the thing to be looking for is trading the pound against something that's strong. So pound dollar shorts could be quite good on risk off trading today. If we do get heavy risk off, then look out for pound dollar shorts. There isn't really much out there today, folks. Yeah, so looking at it and the current sentiment is risk off trading could dominate heading into the weekend with US Iran uncertainty. So watch out for choppy trade. Watch out for the PPI print coming on 30 US to set the tone for the dollar. And then if there is a US Iran strike, look for a spike in oil, spike in gold, euro dollar downside, pound dollar downside, and potentially Aussie US dollar downside. But just be careful of the Aussie because of the strength we've got in copper and commodities. That's what I'd look at today. All right, folks. Happy Friday. I'll see some folks later for the future session. Otherwise, do take care and look forward to seeing you later. Bye for now, folks. Yeah, cheers, TM. And you, Osho. See you, Stephen. See you guys.